Well, hey there, everyone, and welcome to the VIP Trade Room with Roger Scott and Matt Horton. Today is Wednesday, December 17th, and my name is Raleigh White, and I'm coming to you live from a wet, chilly day here in Austin, Texas, and I'm going to be your moderator today. Now, in today's session, Roger is going to be covering a range of important topics with a special focus on day trading with the Trading Zone Live. Now, in today's session, he's going to talk about what exactly is the Trading Zone Live, how to understand, the intraday levels that he draws for us every morning. How do they work? How do you combine these levels and the importance of adding price action into your thought process. He's also going to talk about why adding the market internals to the mix makes total sense when looking at these day trading opportunities. He's going to share how to create a bulletproof discretionary strategy. And as a bonus, once again, as a special bonus, he's going to share how he draws his intraday levels. Now, if you've got any questions during Roger's presentation, please type them in the chat window and we'll address them periodically throughout the session so as to not interfere with Roger's presentation. Now, also, folks, remember that the chat is open to everyone. So remember that we do have some ground rules. Number one, always be kind and supportive in your posts. Number two, keep to the topic. Number three, no political discussions allowed whatsoever. Also, folks, keep your side conversations to a minimum so that the rest of us can focus on the education and the information that Roger's sharing, because after all, he's here to give us an edge in the markets and to help us all become much more confident and consistent in our trading activities. Now, for those of you that were with us this morning at 8 o'clock for Roger's pre-market briefing, we noted that there were several catalysts that we needed to be aware of. Number one, in the constructor sector, we knew that Lennar was up 3% coming into the open. On the energy front, a lot of activity. APA, Oxy, and FANG were all up 1%. And the technology front, we noted that Amazon was up 1% and JBL was going to be releasing their earnings before market open. On the international side, all the markets, Europe, China, and Japan, were all up, giving us some headwinds coming into our open. And finally, folks, on the Fed front, there are three speakers which are scheduled to speak today, and we had crude oil inventory reports came out different than what was expected. People were looking for a bigger drawdown on inventories, and we didn't achieve that. But those were the catalysts that we were looking at today. And for those of you that are wondering, what is the catalyst and why is that important? Well, from Roger's perspective, he believes that information that is either known or will become known during today's trading session and is not yet priced into the market, that's information we need to be aware of. And as a result, each one of these catalysts becomes a volatility hotspot that we just need to be aware of as we consider placing trades associated with them. Now, on the small cap watch list side, we saw that there were three tickers that Roger was interested in. VYNE above 82 cents, UDMY above $7.40, and CGen above $1.77. So let's go to my other chart here and let's see how the small cap stocks have performed today. Now, you're looking at six charts here, and across the top are the small caps. In the upper left-hand corner, we have VYNE. We can see that the pre-market high was right around 83 cents, and we opened up here at about 70 cents, have been drifting lower. Highly doubtful we're going to hit this point and move through it. In the middle of the upper row, we have UDMY. The pre-market high was $7.40. We opened up here at about $7 and been drifting lower as volume is falling off. Do not expect to have a hit here. And then finally, in the upper right-hand corner, you can see that we have CGen. The pre-market high that we were looking at was at $1.80. We opened up here at $1.67 and have also been falling off. So no hits anticipated on today's small caps. By the way, these are 15-minute bars that I'm looking at. If you're just wondering, below that, I had the SPY, the QQQ, and the TLT. So, getting back to our regular presentation here, before I leave the small caps, I just want to let everyone know that when Roger goes ahead and looking for these small caps, not only is he looking for price action, but he's also looking for extreme volume. This is the most important thing here. And when we say extreme, we're talking about volume that approaches 100 times what the normal volume would be for that small cap. Also, as Roger shares, look, small caps are their own animal, okay, folks? And what we mean by that is that they're not driven by institutions. The volume is coming from retail traders like ourselves. No institutions are putting money into the small caps. And also, folks, if you consider taking any one of these small cap trades, please wait until normal market hours to do so. And if you don't have a fill by around 2 p.m. Eastern time, just take the trade off. And oh, by the way, if you do get a fill, just don't hold them overnight. It's not worth the nasty surprise you could wake up to on the next day. Now, as far as Rogers large cap stocks are concerned, we can see that there were several large caps that he was providing us with today. Hold on, let me grab something here for a minute. There we go. So there were on the short side 11, and on the long side there were 13. So Roger's giving us 24 stocks on his watch list. Now, a couple of these have asterisks by them, and what that means is those are really nice A-line setups. So on the short side for CF and EXR, those are A lines to the short. And for those of you in that program or know what A lines mean and what it's all about, well, those are a couple good looking ones there. Now, the other thing I want to mention about these large caps is that these are legitimate tickers that Roger absolutely is looking at. And if any one of these tickers ultimately meets his criteria, okay, more than likely he's going to post those as a trade in the trading pit or in another of his, premium services. So once again, coming into the open today, this is what he has his eyes on. Usually here at the midday in the VIP session, he might give us an update as to what he's looking at now because things can change between the open and where we are here at the midday. Now, as far as Roger's closing comments are concerned, we noted when we got together this morning that the global and the futures markets were all up into the open. So there was a fair amount of headwind moving in our direction. We also noted that the pull to call ratio was balanced and that the VIX was actually down well below 18. All good things as far as we're concerned. But Roger did identify that there were 3 red flags he was concerned about. Number one, he noted that bonds remain stubbornly below major resistance on volume. Bonds are not helping the markets move higher. As a matter of fact, they're consolidated or moving slightly lower. The second thing is this, second red flag, that the sector rotation continues to favor defensive stocks. So those speculative stocks that are interest sensitive, that typically can move the markets, they are down low on the sector list, and we see defensive stocks that are high. The third red flag that he saw today was that stocks that were making 20 and 90-day highs, they were falling off. As a matter of fact, falling off somewhat consistently. So from that perspective, he says, even though I kind of like what I see coming into the open, there are some red flags to be aware of. So from that standpoint, once again, caution, folks. He's worried about the bonds. Once again, if the bonds aren't going to play ball, it's really hard to take a positive momentum seriously. And he said to that point, there really is no large cap momentum moving in the markets as well. So this is what he was seeing coming into the open. He's not saying the sky is falling, but he's basically saying, hey guys, unless we see something, a major catalyst come in to move things, we might just see sideways choppy markets on relatively small volume for the balance of this week. But let's see. Anyway, folks, it's great to have you all here. We've got a nice group of folks, and we do have a terrific agenda here. As I mentioned earlier, Roger is going to be focusing on day trading with Trading Zone Live. And so he's going to be sharing with us what exactly is Trading Zone Live, okay? He's going to talk about, why it's important to understand how these intraday levels work. For those of you that are with us, every morning for the pre-market briefing, Roger shares what his intraday levels are. So he's going to talk about those and why they're important. He's also going to share how to combine levels with price action and the importance of doing that. He also, something that's very, very key is that why adding market internals to the mix makes total sense when taking a look at these opportunities. He's also going to share how to create a bulletproof discretionary strategy. And time permitting, folks, he's also going to share with us exactly how he draws and establishes his intraday levels. Now, if there's anything we don't get to today, don't worry, we will cover it tomorrow. This is a lot of material here, and we want to make sure we answer your questions as well. But this is probably going to be the agenda for today and tomorrow. Now, if you've got any questions during Roger's presentation, please type them in the chat window, and we'll address them periodically throughout the session so as to not interfere with Roger's presentation. And also, folks, remember that the chat is open to everyone, okay? And remember that we have some ground rules. Number one, be kind and supportive in your posts. Number two, please keep the topic. Number three, no political discussions allowed. And also, keep your side conversations between yourselves to a minimum so that the rest of us can focus on the education and the information that Roger's sharing. Because after all, he's spending time with us to give us an edge in the markets and to help us all become much more confident and consistent in our trading activities. And with that, folks, let's say hi to Matt. Let's say hi to Roger. Hey, guys, how you doing? Good to see you here. Hump day, right? Hump day.
It is hump day. It is definitely hump day. You know, it feels like a hump day too, actually. How's everybody doing? How are you doing today, Raleigh?
I'm doing just great, Roger. It's kind of chilly and cold and rainy outside, and people know we never complain about rain. Bring it on. Fill up those lakes, those aquifers, because it's going to be dry this summer. But I'm doing well, Roger. I'm doing really well. Looking forward to today's session. Appreciated your market briefing this morning and taking a look at the markets. I think you basically pegged it right on with regard to things you were concerned about. You shared some red flags with us. You know, it's that give and take situation that we've been in. Seems to me for the last several weeks, the markets are 50-50. They don't want to do, and the bonds are just not giving us that impetus we're hoping for.
The bonds are giving us something. They're causing the S&P right now to cross below the 50-day moving average to the downside, which is now. I don't think it's going to be a clear. Let me share my screen. I'll explain to you what I'm seeing right now. It's much better that way. That way we'll get some benefit out of this instead of just me talking. So here's the SPY right here. You could see the SPY. This is the daily right here, and this is the 50-day moving average, and we're breaking the 50-day moving average. Now, this does not, these are pretty strong bars, but now we have a bunch of overlap right here. So it looks like we're consolidating, and I don't know if we're going to go lower, but I don't know if we have enough muscle mass to break the 50 and break the 50 to go down further on a day like this before holidays. That's kind of like what I'm thinking right now. But again, the bond market is not letting up. So I think the most likely scenario is that we're not going to drop from here, is that we're going to come up from here. And I'll explain today in the lesson, I'll explain why. But right now, this is not me teaching. This is me just giving analysis. The ADD right now is only at 44. So I don't really see the market. I don't, unless there's something that happens and we have a catalyst right now. The VIX looks like it's topping out around here. The VOLD has been consolidating. It's not going down anymore with the market. The ADD went from 995 positive to flat.
Oh,
So if
yeah.
anything, I'm seeing just chop, and maybe some bulls coming in and taking us a little bit higher, and us saying, "Oh, we hit the 50-day moving average and we backed off, and now we're back in the middle of this range." That's kind of what I'm seeing.
Hmm.
Let me just check one more thing, and then I'll get deeper into the analysis. And greetings, everybody. Greetings. We got folks on YouTube. We got Don, Yuri, Diana, Hariam, Mr. Costa Blanca is here. And we got a lot of people here on Zoom. Thank you all for being here. I appreciate all of you. I was just looking at silver. Silver's looking doozy. Look at this thing. It's getting up there. If you're day trading, it's very nice right now. But I wouldn't be swinging. I wouldn't be swinging for the fences on silver right now. It's a little bit overextended. Okay. So you see how Now, I wanted to show you something, and I'll talk more about this when we get into the analysis. And I've talked about this before, but we're going to have a session on this today, so it's going to be very, very important. Do you see how I used the ADD right now to help me figure out if this market is going to stay bearish or if this market is going to start coming up? Let me just move this real quick. I got too many windows, Raleigh, too many windows being opened. So the question was whether we're going to continue breaking hard, okay, or just consolidate here and maybe come back up. That was the question. The issue was, is this consolidation have legs or is this, and to do that, what I looked at was this. And I looked at ADD, and ADD told me that we're flat right now. Now, if we were right now negative 750 or 1,000, I would not be saying what I'm saying right now. I would be saying I think we have some downside. But for us to break further right now, we have to have stocks technically breaking down around lunchtime on a Wednesday. I just don't see it right now. There's no major catalyst. We don't have major news. We have a bond auction that may do it, but that's not for another hour. So right now, I think we're going to consolidate around here. So I used the market internals to tell me, do you remember the example I've taught you guys, the example I've always given you with ADD? And I've said this before. If somebody throws a ball, a basketball, from the 50th story window versus a child that's like this tall, a little taller than my cat throws a basketball to the floor, will that ball have the same reaction? And everybody's like, no, if you throw a ball from like 20th story, that ball, they say if you throw a quarter or something from a balcony high up, it can kill somebody you're talking you're talking about real movement. So you can have a real move. But in this case, sure. I mean, maybe the baby has superpowers, right? Maybe. We don't know for sure. But more likely than not, we don't have any downward momentum right now. There's no downward momentum. All stocks pretty much are right where they closed yesterday. And the mega caps have been doing this now and actually are outperforming the market in terms of relative strength right now. So I'm not really seeing major follow through right now because of where we're at. Now, again, if we were down here, that would tell me most stocks are below yesterday's close. That means they're already being sold off by funds because that's how they got there to begin with. Therefore, I wouldn't be saying what I'm saying right now. So you see, so you guys may remember me telling you how I look at market internals. And let's say I'm in a stock, okay? And it's a large cap stock. It follows the market, right? We've talked about this before. I'm just trying to remind you under different scenarios. And I said, this is when you should be using a wide stop, and this is when you should be using a tight stop. So if the ADD right now, so let's just say, hypothetically speaking, okay, let's say I had a long position on right now, okay? Let's just say I had a long, let's just say, hypothetically speaking, that I was long Reddit right now. That's sitting right at the VWAP. We made good money on Reddit today, by the way, Raleigh. We took it in the pit. We did really well with it today.
Oh, great.
Yeah, we took a couple of points on Reddit this morning. So the question is, let's say I'm swing trading Reddit, okay? Right off the 8-day EMA, which is not such a bad idea, by the way. Remember, I'd never give you a day trade unless I like it for a swing trade. And I'm talking about the pit, but I'm teaching you about day trading market internals right now. I'm just kind of, I'm kind of trying to explain ADD and kind of get your memory to say, oh yeah, I remember him talking about that. So here we have so if this drops below the 15, I would probably get out somewhere around here, okay, out of that stock. But I like this stock right now. I really genuinely like it. I'd probably go long again this stock, So I like the stock. That's why I'm showing you as an example. Volume is looking good. It has really good volume today. It's up already 3% on a day that the market is down. So let's say I'm trading this stock right now, okay? And I'm looking at the stock and I'm looking at the market, right? The market's bottoming out right here. The market's just going choppy. It's not really doing anything. It's not moving right now, right? There's no movement to this market. Okay. I look at the ADD. The ADD is at 19. It's flat. That means 99% of all stocks are right where they closed yesterday. Why in the world would I use a tight stop loss? Where's the market going to go? It's going to run away with the circus? No, it's consolidating and ADD is flat. I can use a wide stop loss. Let's change the scenario a little bit. Let's say price action is right here where it is right now. Maybe a little bit like the red bar right there. But let's say the ADD is right here at 900. I'm going to use a pretty tight stop. You know why? I'll be scared. You know why? Because the market can move. And if the market can move, this can really move. So you see how I'm using market internals that have absolutely no relationship to this stock directly, read it, to gauge how big of a move this stock is going to have one way or another. So I don't care if you trade stocks. I don't care if you trade options. I don't care if you trade the SPY. You see how I'm using market internals to figure it all out? And if you think they're all independent of each other, let's go to Alaska and I'll sell you some ice. Okay? I'm not looking at the chat, Raleigh. Do people understand? Capiche, do you guys understand what I'm
absolutely. I know that several people chimed in, by the way. Roger said that they made good money on Reddit this morning in the pit.
Yeah, yeah.
But so the interesting thing is this here, what you're basically saying is looking at the broader market, makes a heck of a lot of sense, especially if you're looking at a stock that's a part of the broader market.
Yeah, of course, of course. Now, when we launch the small cap service, that's going to be different. It's not going to be market dependent.
Right.
That's why I'm doing it. We'll talk about all that. We're not ready for that yet. But you don't have that. You don't have to be looking at the SPY every 5 minutes. Now, I like looking at the SPY, and I'm not going to change. I'm still going to be looking at the SPY for all the other stuff we do. But they don't have, because they are not driven by institutions. If you're not driven by institutions, then what the hell how is the SPY going to help me gauge you? It's not. It's not. So, but if you trade regular stocks or you trade regular options, S&P 500, all that stuff, you better be looking at this stuff. Mm-hmm. Also, let's take a look at Tick. Look at Tick. What is Tick doing? Are the lows getting lower, or are they getting higher as the day goes on? Let's take a look at this. Look at the lows. Are they getting higher or are they getting lower? They're getting higher. As the day continues, they're getting higher, which means there's less pressing on the gas pedal. Okay? There's less pressing of the gas pedal. What's Volt doing? Volt is not doing anything. And by the way, it's diverging from the market favoring the Volt, which also talks about upside. But you can, if you're also, what about price action? We're at the bottom of the value of the 5-day price action right here. This is the bottom. And it doesn't look like we're breaking out. And if we're sitting here, and if this is coming down to 1100 or 1200, I'm going to pay attention. This is telling me there's less selling pressure as the day continues. This is telling me that there's hardly any stocks breaking down. This is telling me we're consolidating near a breakdown point. And this is telling me there's no volume coming into stocks that are moving up or down. That's a lot of information.
So for Roger, I think David posted something that a lot of us are thinking, and that is, so does this mean things are setting up potentially for some longs? Are we basically
they're setting up for non-direction for nothing. They're setting up for nothing, which, by the way, if the SPY starts coming back here right now and closes somewhere here, tomorrow morning when we talk about today, we're going to say, it didn't do anything yesterday. It hit the 50-day back the way, and it came right back up.
Right.
And today will end up being a nothing day.
Yeah, and that's a great clarification, Roger, how the market internals, once again, you could interpret this one way and go, oh boy, I'm going to start to buy the dip here. Well, it's not that simple. It's not. Right, well, and as you said, this is predicting consolidation.
Right. Well, And also, it's happening when the SPY's literally breaking down the 50-day moving average. That doesn't happen every day. By the
Right.
way, just to give you guys some clear, 2 years ago, 2 years and 2.5 years ago, 2.5 years ago, when I started the pit, this is what the market was doing. When I started testing it at home in the summer, in
Hmm.
July, for 2 months before we launched it, this is what the SPY, literally the day we started it, it was doing. It was breaking the 50-day moving
How
average,
about
and
that?
we had
Yeah.
a 96% win rate in our trades. But I'm not trying to brag about the pit. It reminds me, certain things remind me. Price action reminds me of certain things better because days just run into each other for me.
You bet.
And here's SPY starting to run up. So, ooh, Roger, should we be selling the 50-day moving average? There's markets breaking down. Well, look at market internals. The Volt is going up right here. There it is. ADD is, again, it's flat. It's flat. Price action did not break the bottom of the value area, the 5-day value area. And now VIX is breaking down. And by the way, look at tick. Higher lows, right? And now we're moving up. This is upticks on the stocks, upticking. So from a I don't know, why does this keep coming back here? From a Sorry about that. From a day trading perspective or even a swing trading perspective, we need to get into this area right here. We need to get above. We're going to be on code red high alert. That's, Clyde standing up on his hind legs till we get right here, 677. We got to get to 677. We need to have a nice big fat long bar to 677. But if we do, this will just look like a pullback to the 50-day moving average and nothing more,
Good
just
point.
like it did
Yep.
right here.
Yep.
So let's not be too hasty about this just yet because we are at the 50-day moving average. And this is doing a really good job of consolidating, and market internals. Oh, they're right here. Let me move this lower here. Okay. And market internals are not. This is the SPY. This is the Volt. SPY follows Volt, not the other way around, especially when there's nothing going on. And this is telling me. Let's put it this way: I wouldn't be going short right now. Also, Alpha Zone Pro, what did it do? It just gave us a bullish signal. Tring, tring, tring. See that? That means the
Yeah.
bulls are starting to come in. So by looking at all of these things together, which is exactly what I'm doing here, you start getting a picture. You understand? You start getting a picture of how everything works together. And I'm gonna and for folks who've been following me for a long time, see, here's the argument to that. The argument is, well, Roger, you've been doing this for 30 years. I don't have 30 something years. If you've been listening to me for give me 2 months of your life. You come here in the morning every single day, and you will be able to finish my sentences for me. Because it's like watching a soap opera. Raleigh, how long have you been doing this with me?
Boy, since the 1st of August. I mean, we've
Okay,
been
so
associated, obviously
right,
for
right.
14
But
years, but in this program since the 1st of August, so about 5 months.
all right, let me ask you a question. Is there anything that I do that like shocks you at this point? Like, is
No,
there anything that you're seeing that's like, Roger, oh my God, where did this come from? Like, I've never heard this before. This is all news to me. This is anything remotely like that at all?
no, no. As a
Okay,
matter of fact,
okay.
I don't want to sound trite, but it is a lot of rinse and repeat. And there's
Yes.
nothing wrong with that. That's exactly what is happening. As you said, every
Well,
chart tells a story. Okay. And it's not rocket science.
well, here's the thing. We rinse and repeat, but
Yeah.
price action doesn't.
No, it doesn't. That's true. That's
But
true. And
price
that's
action
that's
doesn't.
that's another consistent point that you've made here once again for as long as I've known you, Roger, but specifically since the 1st of August here. And I agree with you. For somebody that if you have the time and if you're interested in trading the markets, if you spend some time with Roger, this will all start making sense to you. Okay. You will literally be able to look at the markets the way he does and potentially finish his sentence.
Yes, you should. I mean, like when Richie and I look when we're on Telegram and stuff. And there's no like what, like who,
Yeah,
where,
where'd that come from?
how did this? It's like, oh yeah, oh yeah, yeah, yeah. Thank you. Oh yeah, yeah. Oh, good, good, good. There's no surprises, folks. Again, it's repetitive because my analysis method doesn't change, but the market changes. So you have to learn how to apply it to all these different conditions. Now, you'll probably end up seeing three or four different market conditions in that period of time.
Hmm.
And by the way, I hate to say I told you so, and I mean the market's not done, but this does not look like a does this price action look to you like this? No, no. This does not look like this, and it's now coming back up, and it's getting later in the day, and the later we get in the day, the less craziness the market gives us. And again, look at ADD. It's like there's no there stocks are right where they closed right now. Usually, when a stock is where it's closed, just sitting there like this, it doesn't surprise you. It's
Hmm.
a zombie. Okay, so
Well,
what I
the other
wanted,
comment I would
yes,
make, Roger,
yes.
too, also, once again, is that you are a superb technologist. And looking at the market with technical indicators, I mean, there's a certain truth behind what's there, the facts. There's not a lot of variability around that. So, once again, day in and day out, the way you apply technical analysis, it is not surprising to me that there's that much consistency because it's an objective analysis.
Yes. Yes. I don't really do anything. I don't notice, I'll notice something interesting about me. I'm not even a big fan of vertical charts, vertical trend lines. Because, are you drawing at this level or too much? I like things. Look how far do I go with technical analysis? Sometimes a head and shoulders pattern, if I see a 3 month one, symmetrical triangles, ascending triangles, descending triangles. You don't hear me talking about cup and handles or Fibonacci or Elliott wave or Gann
Oh,
lines or
and
fan
occasion, an
lines.
occasional head and shoulders.
Yeah, yeah, maybe an
Yeah.
occasional head and shoulders, but that's about it. That's about as far as I'll go. That's as frisky as I'll get. So again, I keep it really, really simple. And again, the problem is not me. You can learn my stuff. It's the market. The market. It's like somebody teaching you how to drive. Somebody could teach you how to drive in 2 weeks, but you actually have to drive in the
In
mountains and in
traffic.
the traffic and this
Yeah.
and that. And then after a while, you're like, and then it's like driving a car. It's like driving a car and like you don't like if I have to run and I have to get into my car, I don't sit there and go, now I have to okay, where's my watch list? Where's my checklist? That's why I can prepare so easily for these classes because I'm not learning it. I'm teaching you what's inside my head. There's no checklist. First, I do this. The checklist is what first comes to my mind. It's like, what would you do to get into your car? Well, I would make sure I have my keys. Then I would go outside, put them in, sit, close my door. This is instinctive. This is what trading is after a while. If you can't get it to that level, you're going to be frozen. And if you're frozen, you'll never know what to do when you're in a drawdown. You can't be in that situation. You have to be completely even. All right. And that's the hard part, by the way. Learning all this technical stuff is not that hard. Learning how to control yourself is infinitely harder, like a
Agreed.
hundred times harder. Matt, can you hook me up?
Yep.
Thank you, sir. Okay, so let's talk a little bit about levels. I promised I will show you levels. One of the ways that we trade so let's talk a little bit about Trading Zone Live, okay? Trading Zone Live is where my assistant Matt puts on trades all day long using the SPY. Basically trades the SPY or the E-minis or any kind of a tradable index asset. That index asset, which is the hardest traded asset in the world because it's the most liquid and it's got the most eyeballs in it. So trading the SPY is not easy. It's a lot harder. Thank you. It's a lot harder than trading individual stocks. The reason I can't do it all day long is because I spend way too much time doing everything else, and I need somebody laser focused. You may see Matt sometimes just staring like this because that's all he's doing during the day. He's not doing anything else. We got Clyde picking up the slack. So it takes a lot of precision. In order to do that, we use very specific tools. Okay, this is a tool that we use, right? This is called Alpha Zone Pro. Alpha Zone Pro helps us find levels. You see these levels? These are primary levels. These are cell levels. That's cell level 1, cell level 2, cell level 3. This is buy level 1, level 2, level 3. Okay. Um, you may also see these arrows. These arrows on their own are completely random. In other words, they're not going to give you any edge. But when you see an arrow near one of these levels, that's that's money right there. Okay? Levels. The closer you are to a level, that's the key. These by themselves, sometimes they work, sometimes they don't. But when they're near a level, that's money right there. That's money right there. That's money right. This one right here. See, it triggered right near this level, right near this level. That's money. So let me explain to you some of the things that we look at to take trades, okay? We need to have certain things come together. Come together. And we use several different systems, but this is just one of the systems that we use. We want a reversal bar, okay? That's a reversal bar right here. Basically a hammer pattern, okay? We want a reversal bar. Very, very important, okay? Number two, we want that reversal bar to occur near or at the 20 bar low or a 20 bar high. Reversal bar, reversal bar. You see right here how that's a reversal bar to the downside? That's a reverse hammer. And you see how right here, that's a reversal bar back to the, that's a regular hammer. So just wanted to show you that. Now, alone, just looking at these reversal bars at 20 bar highs or lows, while it looks very appealing, it doesn't give you nearly as much of an edge as I would want. To get a true edge, the kind of edge I would want, let me just move some of these things around here. Here we go. Man, I got too many windows, Matt. Gonna have to do something about my windows. Okay, here we go. Okay, there's that. Here. Here. Okay. Back to where I was. So it's very important to find a combination when you have an arrow pop up right around these levels. Okay. Now, this is the software that we use to generate the trades, and then we give you the trades in the Telegram channel. And we also give trades that are key offs off of the VWAP like this. Now, there's a couple of other things that we use. We use an oscillator. This is a 5-minute oscillator. It does not have lag. Now, you're probably asking yourself, what's the difference between this and this? Well, they're both exactly the same thing. There's no difference between them. Some people are colorblind, and some people don't like histograms. So I just made a regular one like this. I prefer to use this one right here. Now, this is going to be the best oscillator that you will ever find, and I'm going to explain to you why. Most oscillators have divergence. This oscillator does not have divergence, which means it takes all the lag away. So there's no lag in this oscillator. Usually by the time price here comes here, the price action here is already ready. You're ready to take profit already. Not here. This is a real no lag oscillator. And here, if you want to follow this, this just tells you price action. This is basically means there's selling pressure, and this means there's buying pressure. So what we do in a nutshell is we combine these levels, right, with the arrows, and the oscillator. So for example, let's say right now, which we did, this is a good example because about 20 minutes ago, we got a long signal here and we would have already taken profit on it. Our profit was right here. Our stop loss was right here and our profit was right here, but we would have already taken profit. But let's say you're swing trading this to the VWAP. What you would do is after you get this arrow, we wait for price action to move higher, to move higher. This is one way we trade the Trading Zone Live. Another way we trade Trading Zone Live is using my levels, okay? And I know certain folks, for example, who use the here, let me go here. They use a combination of oops, excuse me. They use a combination of 2-minute HA bars. Okay. And they use them with my levels. And I will tell you that they swear it works pretty darn well. I know somebody by the name Richard who uses that, and he absolutely loves doing that. So let me show you how to use my levels. And we also use my levels in the Trading Zone Live. Matt uses them as well. And these are my levels from this morning. We broke through the levels. But the way we draw those levels, okay, is very straightforward. We use overnight support and resistance areas, okay? Overnight support and resistance areas. So for example, see how this is a little different colored? It's a little shade. That's the night session right here, okay? That's the session we would use. So let me just back up and I'll show you how we use it. I'm trying to kind of give you guys a little taste of all the stuff that goes into the Trading Zone Live that Matt utilizes. Now, Matt, you've been utilizing my levels, right?
Yep.
How have they been working for you?
Pretty good.
Good. So we go to the overnight high. We go to and remember, we're only looking at this cloud right here, this dark colored cloud. We look at the overnight low, which is right here. We start there, okay? Then we start finding areas of support and resistance, like right here. There's a major area right here, support and resistance. There is a major area right here of support and resistance. You can see it right there. You can see it right there. Pretty straight, very easily visible right there. So we basically use the highs and lows, and we use multiple points of support and resistance to draw our arrows. Now, after a while, after you do this for, say, 7-8 years, it'll become really easy. It'll become very easy. It'll be like a musician who's been writing music for 10 years who hears a jingle. They'll be able to play it right away. You and I, we're going to be going like, how the hell did they do that? But it doesn't take a very, very long time. But that's what we do. We take overnight levels. So here we have our overnight footprint. And I don't mean footprint like the program footprint. Here we have our overnight footprint right here. There it is right there. And we can use these levels to key off of and use a combination of HAs right here to trade this. So for example, here's some levels that I drew for you, okay? Right here. So see this breakdown right here? This is a flat-topped red candle. This is a flat-topped red candle. This is a shorting opportunity right here. Now, you see how it stays red? You could short all the way till right here. From here, stay short till you see a green. You see the flat top? Now you're asking, why did you short here and not here? Because this is too small of a bar. I want a big bar like this. But you see how price stayed all the way through this channel? Red. And as soon as it broke this channel, it went down. That's a way to use it. So hypothetically speaking, let's say price in today's session went up to 676.87. This level right here, okay? This level right here. And you start seeing green, all green, like here. See how it's all green right here pretty much, except for a few? If you see this kind of price action, see right here when we cross, here, let me show you. Okay, this is a beautiful example. Here's a level for you, right? You see this reversal bar? You go long here and you stay long all the way till these flat bottoms end, which is right here. Could have been from here all the way up here. So these levels, they're used as an area of support, resistance, profit target, stop loss, all of that. You could use them very, very similarly in a very, very unique way. And basically that's what Matt, and then another thing that Matt does, and I do this, I do this all day long too. And I mean, we're sitting in the same room, we're looking at the same thing, but he's putting the trades. But again, you see right here how right now we're turning red. Look at this run right here. right here. That's a HA reversal candle. It's a flat bottom green candle. When you have a flat bottom green candle, you start buying. When you have a flat top red candle, you start selling. But the candle has to be bigger than the preceding five candles. I'm going to say this again. If you have a flat bottom, Raleigh, am I going too fast or are people picking
No,
this
they're
up?
picking up. There was a quick question that came up just as you mentioned that, and could you stay in that trade until you get to close below the 8 EMA? This gets back to once again respecting the levels and decisions you make.
Can you repeat what was it
Yeah,
about the 8 AMA?
would you stay in the trade until you get a close below the 8 EMA?
Okay, that's a good question. I don't like to use HAs for daily charts, and I use the eight day EMA for daily charts. I like to use HAs only intraday.
Good point.
Yeah, because you see. Let me explain to you why. Now you could use them on dailies. You could use them, but it has to be a really strong trending asset. Like it's better if you're going to use it for stocks on dailies. You'd be better off using it on small cap stocks that are really moving. And I'll explain to you why. To make one candle, this is a moving average. This is a Asian moving average. That's what this is. So each of these bars takes into account the preceding bar of price data. So sometimes if you're trying to be really quick and by the time you get the candle, it's too late. So now when you're trading short term, short term, 2 minute candles, for example, you want that extra time to get rid of the noise. But when you're trading daily charts, can you imagine having to wait an extra day for the candle to give you a confirmation to get out? It doesn't make any sense.
Right.
So I've never found the need to use these candles. I've never found the need to use these candles on a daily basis. If you want to use them on a daily basis, use them on a daily basis for entry, but not exits. I find that they work much better for intraday time frame. 5 minute, half hour, 2 minute. Richie loves using them on a 2 minute. He uses them exactly like I showed you right here, 2 minute basis right here. So so this is a nice bar right here. See how as soon as you get a flat bottom green candle, it starts a trend,
Hmm.
and then right here, as soon as it here, let me. What happens when it starts a flat topped red candle?
Starts to
Starts
move
going
lower.
down.
Yep.
Starts going down. So if you find a good trending asset, but you have trouble holding on to a trade, HAs are great because they'll basically keep you in a trade. It's like as long as it stays red, just stay in the trade, or as long as it stays green, stay in the trade. So flat bottom greens, and if it's a small, wait for the second one to finish. And if it's red, you want to wait for a red top. Now you're probably saying, Roger, shouldn't it be backwards? Shouldn't it be flat bottom? Yeah, but these are HAs. They're Asian. Everything is backwards in China. That was a joke. Um, but no, I didn't make HA. I didn't make HA candles. I didn't invent them. They were invented hundreds of
Yeah.
years ago for trading rice.
And I
So
just
don't
I
believe.
just went to our good friends, with ChatGPT and asked for a definition, and I just posted that for everyone who wants to read more detail on what a Heikin-Ashi candle is and how it works.
Yeah. So anyway, so that's sort of kind of what we do in the Trading Zone Live, and we post trade alerts all day long on the SPY, and folks can trade them using options, or they could take them using e-minis, one way or the other. And I will talk about all of that in a few minutes. Now, before we move on to the next segment, do we have any questions?
Uh, Post your questions here, guys. Roger, once again, you're moving at a good pace and people are really absorbing. A lot of interest in the Heikin-Achis. A lot of questions here for Richie, 2 minute, 5 minute. What's the difference between the two? So there's some back and forth going on there, but generally speaking, you're right on pace here.
Okay, great, great. So again, I wanted to make sure you guys understand what HAs are, how we use them, showing you all the different tips and tricks that we use in Trading Zone Live. And yes, now that Raleigh and I, we were talking to a few students who told us that they're able to trade index options, and they're having on the options, they're having settlement the same day. So as long as you have a cash account, you could use this, or you could trade E-minis. And E-minis fluctuate just like a SPY does. Let me give you an example just to show you. A few people asked me to show them an example, so I'm going to show you an example, okay? So look at this, okay? This is the SPY, okay? This is MES. So, and this doesn't have any day trading margin requirements. So look at the chart. Look at the SPY. That's the SPY. And that's the E-mini. Do you see any difference, Raleigh?
There's none. And as a
Zero.
matter of fact, you could put the micro E-mini up there and it's the same.
That is the micro E-mini.
Oh, that is the MES? Okay.
Yeah.
Yep.
But they're the same. So this is $5 a point, $40 margin for day trading at a futures broker. After I'm done with my presentation, I'll give you more information on it. But in case you're wondering, look at the SPY. Look at the price on the SPY. That's the SPY. That's the SPY. See 50-day moving average crossing right down. Higher high here than here. And here is higher high, 50-day moving. By the way, the E-mini is holding the 50-day. Look at that. Interesting, huh? But everything else, I mean, tick for tick, look how it's moving. Look at these bars right here. Chop here, moved up for 3 bars, coming right back down, and now look at the SPY. Identical.
Yep.
Identical. So,
and that's not surprising. They will be.
Yes, because you see, folks. Now, if you're ever wondering, well, Roger, what if they get out of whack with each other? Well, here's what you could do. But let's keep this between us. You can sell one, buy the other, and you'll be a billionaire over a day. But hedge funds have already thought of that. They do that all day long. It's called arbitrage. So they can't be different from each other. They literally have to be a tick for tick with each other. Otherwise, you could just arbitrage them. So if a dummy like me could have thought of it, institutions thought of it about 30 years ago.
Yes.
So there's you can't arbitrage this. They're arbitrage. You could literally trade one or the other. They're perfectly in sync with each other. So if you do the options, it's like $200-300 an option. And if you do the E-mini, it's just margin and it's $5 a tick. So right here, for example, and again, this is just general information. This isn't any kind of specific, So you see here, 87.98 to go from 67.96 to 60 from 67.96 to say 6,800, right? That would be what? That would be 21 points. 67.79 to 21 points. 21 times 5 is what? 21 times 5 is 105. So to go from right here to right here is $105 gain. Okay. Now we just broke the low on the E-mini. Let me look at market internals. I don't know. I haven't looked at market internals for almost an hour. So let me take a look and see how they're doing. Yeah, Volt is starting to, ADD starting to break out. Break down, I mean, starting to. But it's not, there's not much there. Now there's something right there. There's some volume to this. Some volume is finally coming into this move. Look at this. It's 1 o'clock. It's almost 1 o'clock in the afternoon. Look at the tick. That's problematic right there.
Yeah.
That's problematic. Ah, he speaks. He speaks.
He's been focused on it. Yep.
Yeah, he speaks. And listen, Einstein, why don't you talk to us since you're trading this? You want to give us a few words of wisdom about today's price action?
Yeah, sure.
Go ahead.
In terms of what I'm seeing right now, the Vold is not super concerning because it's still in the range. It's chopping back and forth. The market's chopping back and forth. The ADD is at negative 127, so that's basically neutral. That's not a factor. I do not like that the tick hit negative 1,062. However, if you look at the VIX, it's not at the high.
Lazy to go back up. Doesn't look like it wants to break this. I'm choreographing everything you're saying on the screen.
Right.
Yes.
So I'm not super scared this is going to dump.
Okay. All right. So we're going to move. Oh, yeah. And folks, remember something. In 15 minutes, we have the 20-year bond auction. Okay. Very important. And actually, in 13 minutes, I apologize. In 13 minutes, we have the bond auction. It's a 20-year bond auction. And anything over 5-year on the bond auction could make some difference. Again, this is ADD is very stubborn. It doesn't look like it really wants to go down. Okay. And either does the market right now, actually. Pretty good wick right there. Wicking out right here. See, I thought I was just looking at the SPY. I was looking at the E-mini. There's no difference between them. All right, let's move on to the other segment. So the first thing I want to do before we move on to the next segment is I did not give you guys stocks yet for today. So let me give you those. Do you guys want them, or should we just skip it and go to our segment? I don't have the chat open, Raleigh, so you're gonna have to.
Yeah. So guys, we have, it's 12:49, 12:50 at this point in time. Roger, why don't, if you could do it quickly, let's do that midday update, and then we'll move to the other presentation.
Let's do that. Always good to have a choice. Here. There.
And folks, what Roger didn't cover today, we're going to cover tomorrow, because we're doing back-to-back sessions here, and we're going to be covering a lot of this information in detail so we sink it in before the holidays.
And we may actually want to take some live trades tomorrow.
That'd be great.
That would be fun. Maybe I'll do some live trading tomorrow. It's been a while. It's been like 2 days. Okay. All right. So let me give you guys stocks that I like right now. I'll give you shorts first. Oracle. I like Oracle to the short side. I like BE for a short side, especially with it violating the 100-day moving average on good volume.
Is that to be or not to be?
Yeah, that's a good one. CRWV, CRW CoreWeave. It's an interesting stock. CoreWeave. SMR. Pretty bearish stock. These are all swing trading opportunities. And PDD. Man, this stock just crabbed the bed. Look at that. Almost at 1 o'clock in the afternoon, too. Yeah, that's a breakdown right here. That's definitely a breakdown right there. Okay. Now let me give you the longs. Reddit. Oh, my goodness gracious. I think a lot of people are very happy about this stock today.
Yes, they are.
They're pretty happy about this stock today. Very happy about this stock today. Yeah, look at this. All right. Make good on this stock today. I still like it, by the way, for a swing. I'm considering getting into it again today. I really am. Bros, that looks good. I like the stock. Look how it was consolidating around here, and now how it's breaking out and holding this nicely. I like that. EL. That's a nice. What kind of pattern is this, folks? Matt, add EL to your watch list, would you, Matt?
Mm-hmm.
Nice one right there.
Bingo. They got it, Roger.
Okay.
A-line.
That's right. Better believe it. Dollar General. I don't know what it is, but maybe it's the fact that volume is getting higher. Maybe it's the fact that volatility is increasing. Maybe it's the fact that it's near all-time or swing highs. I don't know, but I like this. I like this flag. Okay. Twillo. That's very nice right there. nice chart. It's a little deviated from the 8-day, but not too much. Fox A. That is a very nice looking low risk. This actually looks a lot like Reddit. I like it. I like it. I like it, like it. Matt, keep an eye on that one too. I'm highlighting this one, okay? And then there's one that we currently have in one of our programs that looks just like Fox A, which actually looks really good right here. Actually looks really good right here. Okay, now let's. So if you guys, whoa, what happened to the light switch, Matt? Lights went off. Okay.
So Roger,
no,
before you go, can you look at a couple more stocks before we move on?
Of
Yes.
course.
Omar was wondering if you could take a look at Crowd, CRWD, on the short side.
No, it's set right at the 100-day. This has to break the 100-day.
Okay.
If it breaks the 100-day, you got all the way to 200. But this is not. No. This looks like it's finding support at the 100-day, and it looks like it wants to come back up, actually. But and it doesn't have really good volume, so I wouldn't mess with it right now. No.
Okay, and the other one was Lilly, LLY.
Lilly doesn't look bad. It looks okay. I like Lilly. Lilly doesn't look bad. Lilly looks like you can buy it right near the 8-day EMA for a swing trade and kind of maybe ride this up or get out like very low risk right here. I'd prefer to see it a little stronger today. I wouldn't day trade this with your money, but I mean it's not looking bad here. I can't say anything bad about it from a swing trading perspective.
Yep. So, and a couple more real quickly, and then we'll have to cut it off, guys. Tesla, TSLA. I know it was on the watch list this morning.
Yeah, I like Tesla near right here. Again, assuming it bottoms out, I like it around here for a swing trade because it's now above this area. So I probably would give it a shot somewhere like right here.
Right about there.
Right around, like about $4 cheaper, and make sure that it doesn't violate the 8-day.
And the last one was Baba to the short side.
Baba. If I can't tell if it's to the long side or a short side by just looking at it, we have a much bigger problem on our hands. I'm going to tell you that right now.
I'm just trying to set your expectation.
No, of course. No, Baba actually looks like a perfect short right now. And let me explain to you why. It's in a downtrend. It just broke the 100-day moving average. The only thing about Baba is I'd prefer to see, I think it already did actually. Did it or didn't it? It actually did by it actually broke this level. Baba looks good. The only thing about Baba is it doesn't have any volume. So I would be really cautious, but I see what you're seeing. And also it's a very gappy stock. It's an ADR, so it trades in China and it trades here. So I would be very cautious with it because it's gappy. But this is a very nice looking structure. A very nice looking structure. Very nice looking structure. Volume is dealing. I'd love the stock. I'd probably enter. I would engage if volume was higher. But not a bad look at all. You could find a lot worse looking stocks than this.
Yeah, excellent. Roger, thank you so much for that. Once again, terrific session. And I just want to let everybody know that this session is being recorded and it's in YouTube. And let me go ahead and post that for you. So if you go to Roger's YouTube channel for today's VIP session, it's in real time. You can go back immediately and take a look at this session. So I put it there for you, youtube.com/@Roger-Scott, and go to live and look at today's VIP session, and you can watch a replay of this. Just unbelievable, Roger. Just a great session today.
And we're not done yet. We're going to have an educational session right now.
Absolutely. We're going to take it to the next step.
All right, folks, let's